Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, January 31st, 2020. We are in the final day of the month, the final trading day of January. We are in the last day of the week, and we are in the last hour of the trading day. I mention this each day, but I think it's worth repeating because it is important in my opinion. I am primarily an end of day trader, meaning that I make the majority of my buying and selling decisions right near the close, just a few minutes before the market closes. And the reason that I do this is because during the day, you have the day traders, you have the algorithms. They battle it out. I consider that price action a lot of noise. At the end of the day, you have the large financial institutions coming in with size and taking the price away from the day traders and the algorithms. They have the most knowledge, they have the best technology, they have the most money, they have the best research, and at the end of the day, they take control of the prices away from the day traders and algorithms, and they move it to what, in my opinion, is the most valid price of the day. And that is why I choose to make the majority of my buying and selling decisions on their coattails, doing what they're doing at the end of the day. So, well, quite a day today. Quite a day. There's a lot more fear in the market because of the coronavirus. It seems to be expanding and spreading, and the market does not like it. Currently, the Dow is down 563 points, down 1.95%. NASDAQ is down 126.78, down 1.3%, and the S&P is down 53 points, down 1.63%. So looks like we've gone negative for the year on the indexes. So anyway, risk is always the most important thing to look out for. We can't anticipate something like this happening, but it does happen, and we always have to be aware of risk and not have too much risk on. So, should be an interesting day. I personally have been waiting for a pullback for a while, and it is here. So we'll have to see how this all shakes out here at the end of the day, going into the close. So, Gamer is here. Hey, Gamer, good to see you, David. Thank you for coming out. Your Denver Nuggets beat up on my Jazz last night. You guys have a good team. Hey, John, good to see you. Appreciate you coming by. And John says, hey, guys, thumbs up. Thank you, sir. I appreciate that. Zach, hello, my friend. How are you, sir? Good to see you. Evan, hey, buddy, what's happening? Nice to see you as always. Here's Mount Doji. Good to see Mount Doji. Hope you're having a good day, my friend. Steve, hey, buddy, what's going on? Thank you so much for being here. As always an honor, always a privilege, always excited to have you here. And I know everyone else is, so thank you so much for coming. And thank you also for including me on your list today on Twitter. I always really appreciate that. Steve says, hey, Greg, cash feels good today and getting out of the S&P overnight trade this morning. Yes, we got out right at the right time, didn't we? So anyway, interesting. We have some pullbacks here. We'll see if we maybe have some potentials for today. Mount Doji says, what a week. January closing red, 2020 closing red. The decade closing red. Yes, you are correct. Hey, Jesse, good to see you, my friend. Haven't seen Jess for a bit, been in contact with him, but thank you so much, Jesse, for coming by. I hope you're doing well, sir. Steve says, I talked to Dan, the owner of TrendSpider, today and told him about the script you showed for the V1, V2, and he was interested in seeing that work. Could you email me that info? Yes. I think Dan contacted me on Twitter the other day. He didn't say anything about that, but yes, for sure. I will email you. Well, we should talk about that. Steve. But yes, we will definitely do that. Hey, Marco, good to see you, my friend. Nice to see that you sold Amazon yesterday. I think you got, was it you that was out at 2,100, I believe, something like that. So congratulations. Really glad to see that. Hello, Robert. Marchant, nice to see you. I think this is the first time you've come, so thank you so much for visiting. If there's anything any questions you have, Robert, you please let me know, okay, sir? Marco says, hi, Steve. Hi, all. New Trader says, hey, Marco. I love that name, Marco. One of my first German Shepherds, his name was Marco. I actually even built an apartment complex, and the driveway for the whole complex was called Marco Drive. How about that, Marco? You have your own street here in Ogden, Utah. Okay, well, where should we begin? All right, I guess I'll just begin with the format for today. So first of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back, look at my current positions, talk about when I bought them, why I bought them, how I'm going to manage them moving forward. Oh, and I forgot, we're going to do right in the middle. And then after that, that's right. Then after that, we're going to do a few minutes on trader psychology. Very important. I think it's the greatest skill that you can acquire and hone in your trading is the ability to be self-disciplined, the ability to follow your plan. You can be the best chartist, technical analyst in the world and put together the best trading plan with money management, entries, exits, support, resistance, all that kind of stuff. But if you can't follow that plan, then what good is it, right? So if you find yourself not being able to follow your plan, please put some time and energy into yourself and work on being able to follow the plan that you design. In my opinion, the best way to do that is to position size conservatively so your emotions are not amplified. Then after that, we are going to go through my watch list. We're going to look at each stock. We're going to look for support, resistance. We're going to look at indicators such as MACD, RSI, moving averages, ATR channels. And the way that I view trading, I mention this each day, but the way that I view trading, I look at each indicator as a potential group of buyers. And to put yourself in the best position, in the most likely position to improve your odds to have a profitable trade, you need to be in the company of other buyers. So if I look for a confluence or a combination of indicators, I'm looking for a confluence or a combination of different groups of buyers. So if they all meet at the same price in the same time frame and on multiple time frames, by the way, then that puts me in a better position to have a positive trade. So I'll look for a combination and confluence of indicators lining up together, or in other words, different groups of buyers lining up together. Secondly, have to make sure I have a good risk to reward ratio based upon a valid resistance above me and my valid support below me. If I'm going to risk $100, I want to make at least 200 at the minimum, 300 even better, having a better risk to reward ratio. And then thirdly, just make sure you do not have too many correlated positions. You don't have too many stocks that are in the same industry, because it's just like taking a double or a triple position if you have 3 stocks in the same industry. So that's what I'm going to look for. If I find something at the end of the day, I'm going to enter the position right before the close of the market. And then after the market closes, if anybody has any questions for me, please let me know. I'm happy to answer them, happy to clarify for you. If you have any stock symbols you'd like me to take a look at, I'm very happy to give you my humble opinion and break down the chart. If there's any charts or any symbols that you think would be helpful to the group, interesting or helpful to the group before the market closes, and you'd like my opinion on those, please let me know. Put a star by it in the chat so that I know it's time sensitive, and I will definitely do my best to get to it before the close of the market. So that is the plan. So if you don't mind, hang on for about 40 seconds and I'll be back after I run the U.S. legal disclaimer. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, we're back. So I woke up this morning with cold/flu. When you wake up in the morning and you're just like, uh-oh. So take it easy on me today. I'm going to do my best to get through this. I'm glad it's the weekend. Maybe I can sleep during the week and get rid of this thing, hopefully, huh? All right, well, let's start off with my current position. Oh, wait a minute. Steve says, Dan and Jake said they wanted to see if you could be on their live broadcast. with me? I would love to, Steve. Thank you so much. Yeah, that would be an honor. That would be an honor. That's Stan and Jake from TrendSpider, right? That'd be great. Thank you. Kurt, hey, my friend. Kurt's a student of mine, a previous student of mine. Really great one. Kurt says, hey, Greg, crazy day today, crazy week. Hey, Jess, that was a killer trade you had there. Yes, it was. I took it off the board. Somebody remind me what that symbol was? We can take a look at it. That was a great trade that Jesse had. Robert says, it's Bob on a different account. Okay. Good to see you, Bob. Good to see you. Frank says, a poem for today. Okay. Let's see if I can not butcher this poem this time. Trading on margins, no bargain, despite all the FOMOs and jargon. For it's a quick trip over the waterfall once you get a margin. Oh my gosh, isn't that true? So true. I really hope that none of you out there will ever get a margin call, because I have had one and they are not fun. And why did I have one? Because I was young. I didn't know what I was doing. I had too high of a position size. And the other day I mentioned nobody out there cares. Well, I do. But in reality, nobody out there cares about your account. Nobody's probably going to be looking over your shoulder, making you sell, but your margin clerk is always there, because if you get less than 50% equity, they will be there to look over your shoulder, ask you for more money. If you don't have the money, they will just sell it out at a major loss for you. So I guess we have that going for you. But the way to stay out of margin calls is just position size correctly. And if you position size like I do, 10% maximum, 6% maximum positions, you will never have a margin call. So thank you, Frank. That's great. If you don't mind, I'm going to share that. Trading on margins, no bargain, despite all the FOMOs and jargon. For it's a quick trip over the waterfall once you get a margin. That is true. And if people get margin calls all at once, that causes these huge waterfalls down. Steve says, you are the master poet, Frank, 5 stars. I totally agree. Thank you, Frank. Glenn, hey, buddy. Hey, Greg, glad to be holding gold today. Closed my PayPal at 116 today, 10, as my indicators gave a short-term sell signal, 5 below the test, 5 SMA below the 10 SMA and MACD negative. Yes, I've got you on the board here on gold. Congratulations, my friend. Oh, I forgot to mention, after I go over my positions, we're going to go through some of the positions that you shared with me. So fantastic. And we'll look at that in a second. So, all right, well, here we go. So I did buy Disney yesterday. We had a nice confluence of signals here. We had a V1. Here's day 1. Here's day 2. Day 2 washes out day 1. Closes above day 1's close, also rejected the negative third ATR channel, also closed right above the 200-day, which I like. You know, this is a good example of being just almost as close as possible to the stop below you. Legitimate stop, right? Valid stop, or I should say support, a valid support underneath with the 200-day moving average. If I was wrong, if it closed below even 1 penny, I would get out. Take a small loss. If I'm right, I have the potential to have a nice large trade. I could be large big, right? And that's the key to trading. Positioning yourself with your support or your stop as close as you possibly can, but it has to be a valid support like this 200. Do I know the trade's going up? Of course, I have no idea whatsoever, right? But I can put myself in a position to have a good risk to reward ratio. So I am thrilled this is up today. Absolutely thrilled. Was higher, didn't quite hit a profit target, but the relative strength of Disney is incredible today, being up when the market is down 607 points. Holy smoke. So as long as Disney stays above the 200-day here, I definitely keep it. Really glad to see that Disney is up today. Really glad to see that it actually came back down earlier in the day and tested the 200-day. twice now and closed back above. So as long as this holds above the 200-day, I will keep it. My ultimate profit target up here is the 50-day moving average. My intermediate profit target is the 50 RSI. So, you know, I'm happy for small things. It's always good, even if you're having a down day, which I am. But, you know, try to look at things the glass half full, and be happy and appreciative of things that are going your way, even on a bad day. All right, Merck. I did buy Merck back here on the 27th of January, under the 30 RSI, over the 30 RSI, under the 100, over the 100, and the V1. Started out good, went up the next couple days. In the last 2 days, it is down. My stop here is closed below the 100-day moving average, so I will be taking a loss on this trade, but this is a good example of why I like to phase out. I did phase out some here. I did phase out, I think, 3 profit targets here on Merck. So, you know, that allows me to lock in some profits on this trade at higher levels, and then take those chips off the table, which helps mitigate the loss to the downside here. So this is a good example of why I like to phase out, but I definitely will be getting out of this trade today. SPY. All right, in case we have some new viewers today, I want to quickly go over this. I do buy the SPY every day at the end of the day. I sell it first thing the next morning. I base this not on any support levels, technical levels. I base this on a long-term back-tested study from Liz Ann Saunders at Bespoke Invest. This study goes all the way back to 1993. In this study, they use 2 approaches. They test 2 approaches. The first one is buying the SPY at the open each day, selling it at the close. So buy the open, sell the close, buy the open, sell the close. If you have used this every single day since 1993 for all your troubles, you would have returned a negative 13.9%. However, if you use this approach, which is what I use, and instead of buying at the open, selling at the close, you buy at the close, sell at the open the next day. So buy the close, sell the next open, buy the close, sell the next open. You would have returned 634.2% return. Past performance is no guarantee of future results. That is absolutely true. But if I'm going to allocate capital to a trading approach, I definitely would prefer to allocate it towards something that has good back-tested results than something that has bad back-tested results. Here's the chart. The blue line is the buy in the afternoon, sell in the morning. The orange chart is the buy in the morning, sell in the afternoon. You can see there's a clear edge. There has been a clear edge so far using this approach. And I like this chart because it shows if you have an edge over time, what your equity curve can look like. There's ups and downs all the time. It's just a normal part of trading, even if you have an edge. So you have to make sure to be position sized correctly, so you don't stop using it when you have a down, when you have a drawdown, and you don't get frustrated and you don't end up losing too much money. So just, you know, slow and steady as she goes. I buy 10% every day at the close, sell it first thing in the morning. So that being said, I did buy SPY yesterday at 327.68 and sold it this morning for a loss at 326.97. So, you know, it's one of those things when you look at this chart. Yes, I did have a small overnight loss. I can definitely live with that, but missed out on all this drama. So it's been kind of a tough slog this year with this approach. 2019 worked very, very well, had a really nice profit. This year, I am definitely down using this, but you know, we had the Iran situation, now we have the coronavirus situation, a lot of volatility. But anyway, steady as she goes. I am confident over time in this approach, but it's been you know, it's been a bit of a rough patch the last little bit. So anyway, I will be buying this again today at the end of the day. Okay, last position. I did buy Win yesterday. This was pointed out by Evan. I really, really, really like this chart here. We came down, we gapped down, we've moved sidewards, showing some support. Yesterday, we washed out the previous day's low, closed above. We also washed out this previous low here. We also washed out the 200-day moving average and had this V1. Here's day 1, day 2 washes out, day 1 closes above. So I did buy it here yesterday at 126.60. Slightly down today, but again, the relative strength here is excellent. So I'm very grateful for that. So 3 losers, 1 winner today, but the losers have not really been that bad. Merck was a bit bad, but still better than the market. SPY was a small loss, and Win very small loss. So that's how it goes, and you have to get used to losing in trading. It's a big part of trading, and yes, it has been frustrating lately, but that's how it goes. I do want to point out that this is a great example, everybody. I mean, do you remember this chart I showed you the other day? And I had some people ask me, why are you not buying up at these levels? Because it keeps going up every day. And I said, I know, it's frustrating for me too, but I have to stick with my plan. But I showed them this chart, which happened about the same time last year, where everything was up, 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 up. And I said, it doesn't offer a good risk to reward ratio up here. If we do break to the downside, we can take out days or weeks of profits very, very quickly. And look what happened back in 2018. Exactly that. Now, look here, right? I mean, the S&P has taken out, I don't know, a month's worth of trading in 1, 2, 3, 4, 5, 6 days. So, that is why I do not buy up in this range. Just like Frank's poem said about FOMO, everybody gets FOMO up here, right? There's a lot of good news. Everything looks good on CNBC. There's lots of happy pictures of faces on CNBC. But, you have to control yourself and have a plan and wait for things to come back into some kind of value or undervalue. And, of course, I can't predict the coronavirus. I'm not even alluding to that. I'm just saying that once you get up into these really high overvalued levels, like we did back in 2018, we didn't have a coronavirus back here, right? But when people decide it's time to the exit, it's a perfect example. Look at the stairs going up and look at the elevator going down. So that is exactly why I sit on my hands and try to be conservative when the prices are up here. So, now we're getting back down into some kind of reasonable levels. Where was I going with that? Okay, that was it. Now, let's take a look here. Glenn had a beautiful trade on gold back at 147.02 up here. Moving up nicely today. So congratulations, Glenn. Really great. PayPal, I think you mentioned, got out at 116. So nice going because it's getting pretty whooped up on today. Let's see, May bought PAAS, which is silver, back here on 21.95 back on the 21st of January. This has moved up nicely. Glad to see that moving up for you. And then our friend Bing He did buy Dollar Tree yesterday with this nice V1, nice bullish engulfing bar, rejection of the 30 RSI, rejection of this previous low here. Is down slightly today, but it is hanging in there pretty well. Hey, Bing He. Oh, I was just talking about you. Mount Oji says, I got out of SIRI so quickly. SIRI. Oh. When did you get out, Mount Doji? Did you get out yesterday, I hope? Bing He says, took F wonk at 47.38 and LIVN at 16.10 on the market open. Looks like I may need to cut both for a loss. F W O N K. Yeah, it's getting pretty close to that halfway mark, isn't it? I like that trade. I forgot about that trade. Let me know if you keep that or not. LIVN. Oh, that one's hanging in pretty good. Frank says, thanks, Greg. I was the one who sold Amazon at 2100. Back to my pillow cash cut. Okay, great. That's right. I forgot. who it was, because I know a couple of you said that you had them and also had some calls, I believe. So you got out at 2100. Very nice. 88 points higher. Cash pillow cushion. Sounds good, right? All right, how we doing here? Let's take a quick gander. Disney's hanging in there. Merck's looks like it's going to be a goner. SPY, going to buy that at the end of the day. And Win is hanging in there. So listen, this is the time of the day where I like to talk about trader psychology. There's some really great Facebook and Twitter accounts out there, and I really do appreciate them because they spend a lot of time and effort, burn a lot of calories on putting out good trading words of wisdom for us, good things to think about, good things to internalize. One of my very favorite Twitter channels is Stephen Goldstein at AlphaMind101 on Twitter. Stephen is a retired professional trader. Now he's a professional trading coach. Really great guy, really knows his stuff, has a great podcast called the Alpha Mind Podcast, which I was fortunate enough to be a guest on. So thank you, Stephen, for posting this. But Stephen says, killer trading quotes. Throughout my financial career, I have continually witnessed examples of other people that I have known being ruined by a failure to respect risk. If you don't take a hard look at risk, it will take you. By Larry Hite. Larry Hite is a market wizard. Great chapter in the book Market Wizards, in case you haven't read that. But Larry Hite's entire focus on trading is number one, first and foremost, risk. Always managing risk. That's what our job is as traders. Our job is really not to trade, it's to manage risk in our positions. And if we manage risk okay, if we're careful with risk, if we keep on top of it, keep the risk low, the rest will take care of itself. But if you do not manage risk, then that is what's going to beat you up. And just like Steve says, just like Larry Hite says, throughout my financial career, I have continually witnessed examples of other people that I have known being ruined everybody, by a failure to respect risk. If you don't take a hard look at risk, it will take you. So please, always think about risk. Position size conservatively. That's why I use a 10% position size. You're going to have ups and downs. You're going to have drawdowns, but the key is to have small drawdowns, and you can have small drawdowns by getting out of positions quickly, by using a conservative position size, and then on the other hand, being patient with your winners when they're going up. Remember, most people are fearful when they have a profit. They are hopeful when they have a loss. When they have a loss, they're like, it'll turn around, it'll turn around. But when it's up, they're fearful. I don't want to give it back. You have to do it. It's counterintuitive, but you have to switch it around. You have to be hopeful when you have a profit, and you have to be fearful when you have a loss. And that's exactly what I do. When I have a loss, I am fearful. That's why I get out. And remember, I always talk about the analogy of having a garden. Your winning trades are your vegetables and your flowers. Your losing trades are your weeds. If you let too many weeds take over your garden, it's going to ruin all your vegetables, right? And all your flowers. So, be a good gardener, weed out those losses when you have them quickly, and then let your flowers and your vegetables or your winners grow. So thank you very much, Stephen. Appreciate it. Hope you're doing well, sir. Boy, when you don't feel so well, speaking really wears you out. So hang in there with me, please. Okay. Where are we now? Oh, down 628 points. Fantastic. All right. Well, let's go through here, take a look, and see what's happening. Apple. Ooh. Well, I have a friend that sold 100 calls on Apple, which is a huge position. So he is happy today. Actually, he's not happy with the stock, but he's very happy that he wrote the call. So, again, here we are above the third ATR channel. Here we are above the negative, or above the one ATR channel. I have been waiting for a dip on this to come back into the value. 3-4 days ago, we did get one back into the value, but now we are back. Sometimes when you're up here, you just feel like they're never going to come back into the value zone. But like I tell you, they always do come back. Anything above the 1 ATR channel, I consider overvalued. Anything in the value zone, I consider valued. Anything under the -1 ATR channel, I consider undervalued. So, you know, can you imagine if you'd got excited about buying up here? I mean, you'd just be hammered. So anyway, we're back down into the value zone. That's good. I need the stock to start moving sideways now, find some support, look for a V1, V2. I do mention this, but whenever there is a bar that it comes from above the 1 ATR channel that comes back down into the value zone and it's larger than 1 ATR, more than 50% of the time, actually quite a bit more than 50% of the time, it will go down and touch the -1 ATR channel. So I would not be surprised at all to see Apple move lower down here. I mean, it's not a forecast. I'm not saying it's going to. I'm just saying I wouldn't be surprised, because most of the time, it's not like I'm going to short it, but let's wait and see what happens if it does go down and touch that. But my opinion is that it's going to. But if it just keeps moving sideways, I look for a V1 or V2. But I've been waiting and waiting and waiting for this dip. And well, here is the dip. Okay, so that's Apple. Adobe is also down. Same with Apple. I need to pull back into value, sideways movement. Amazon, whoa, look at that. I mean, it's up huge today, but you know, I talk about the 6 ATR channel as generally that's about the maximum limit. This is what I learned from studying with Dr. Alexander Elder. When prices get up to the 6 ATR channel, he calls that, you know, fading in extreme, whether it's to the downside or the upside. And Amazon got pretty dang close. Well, actually a little bit above, but you know, this is a bearish reversal bar here. Huge gap, still up 7%, which is amazing, but no more buyers actually. Well, just a few more buyers after the open, and there's been selling the rest of the time. So nice job, Frank. And I think someone else told me they sold some Amazon, but if you still have Amazon, I know you're still happy with the 7%. So nothing I can do with Amazon here. Boeing, well, we made a lower low. We came into the value zone. You know, I had some people ask me why I didn't buy this V1 yesterday, even though it's a higher low, because I wanted 2 days down. So if I could get another day down and then a higher low V1, I would take it there. Berkshire Hathaway, huge big bar up yesterday and then huge failure. You know, generally, if you have a large bar, it should hold 50% of that bar, and today it did not. So that's not such a good sign. Beyond Meat, Steve had a beautiful trade back here on the 7th of January with the 520 EMA crossover. Huge, beautiful move up. Remember that bar I just showed you on Amazon? Kind of similar to this. He exited with the 38 point something percent gain on this. So congratulations, Steve. Ever since then, it's just moved sideways. I was waiting for a pullback into value. Well, here we are. Now what do I need? I just need it to stop going down, move sideways, and look for a V1, V2 entry to buy this dip. Caterpillar. Ugh. So the 30 RSI and the 200-day were not enough to hold Caterpillar up here. In the future, if it closes back above the 200, I might consider buying it, but definitely not right now. The Dow, you know, we had this big move down. We had this bit of a dead cat bounce, you know, from the top here to the bottom here. 50% of this move probably is where you're going to have resistance, and that's almost exactly where you had the resistance before it turned back around. So this is pretty ugly. Nothing there. Walt Disney, of course, we went over that. I bought that yesterday. Very happy that this is somewhat profitable today on a day like today, but amazing relative strength from Disney. Etsy. Well, I was waiting for a pullback into value. We got it. We did make a lower high. Whenever I have a pullback into value and make a lower high, I then need to wash out the previous low. So somewhere down in this area is where I'd be looking for Etsy. Facebook, oh geez, look at this, everybody. Again, you know, just shows you the perils of buying up at these extended prices. right? I'm not cherry picking this chart here. This happens all the time, right? It gets extended and then it pulls back into value. Pulled back into value, came up, rejected the previous high. If you remember, I was telling you that we had a huge bearish divergence here. Here's the highs. Here's the reading of the MACD bars to the upside. We had a pullback. We went higher yesterday with no green bars. That's a missing right shoulder. And then we had earnings and it's just collapsed. So I would be looking for Facebook. Really good deep dip buy would be right down here, the confluence of the 100-day and the 30 RSI. So I'm going to be patient, wait for something down in this area. But like I tell you, look at the charts, go out in the future, note down where a good confluence of signals would be. And that good confluence of signals is right here. I'm making this determination completely objectively. I don't have the position. I just know that if we get down in here, that's where I would be interested in buying. So I just need to sit on my hands, be patient. Gold. Okay. Let me take a look real quick. All right. So, as I talked about earlier, let's take a look here. Okay, so we talked about earlier that Glenn bought this back here, 1472. Really nice trade, Glenn. What I'm waiting for is a pullback into the value zone, sideways movement, V1, V2, or the 5 EMA to cross under the 20 EMA and then back over. Had the exact same trade back here on the 13th of December when the 5 went under the 20, closed over the 20, and you can see that was a beautiful trade that we had up to there. So nothing on gold here. Looks like it's very strong. Google, bearish engulfing bar to the downside, V1 to the downside. Does this mean I'm going to short it here? No, because now it's back into the value zone. If I'm going to short, I would prefer to short above the value zone when it's above value. So, if Google could now move sideways, consolidate, V1, V2, I might be interested in that. Goldman Sachs, nothing on Goldman Sachs. We have the 5 still above the 20 EMA, but if the 5 crosses below the 20 and then back over, that's a valid crossover signal on Goldman Sachs. So I'll just have to wait for that. Home Depot, waiting for a pullback into value. It is back into value zone. Now I need to move sideways. Look to buy that dip with the V1, V2. IBB, IBB is somewhat interesting here. It did go under 30, over 30. Currently, it's 31.06. I'm going to be a little conservative on this and see if I can get a rejection of the 100-day and close back over and still being over 30 RSI. So I'm going to be conservative on here. Yes, technically under 30, over 30, you could buy here, but I just feel like this 100-day moving average here is going to act as a bit of a magnet. It's always good to look back in time and see what moving average did work as support. Well, if you go back, we gapped over the 100, came back, tested the 100. So, in that case, not for sure, obviously, but if a moving average has supported the price in the past, there's a better chance that it will in the future, the way that I look at it. So right in here is where I would be looking to buy IBB. Intel, kind of had that big top, and that was the top after earnings. I'm waiting for a pullback into value. Again, can you imagine buying up here? Letting your emotions get the best of you and buying up here and then holding it. And then the more and more it goes down, you're like, it's okay. It'll come back. Maybe, but maybe not, right? So looking for a pullback into value there. Russell 2000, man, we're down 655 points. Wow. Russell 2000, same with IBB. I would be looking for Russell to go here, test the 100-day moving average, and have a confluence of the 30-day moving 30 RSI. So right in here is definitely where I will be sticking my toe in the water on Russell, the Russell 2000, but not yet. Johnson & Johnson, need to pull back into value. CarMax, same, pull back into value here. Coca-Cola, looks like had good earnings yesterday. Today it's given some of that back. Looks like it lost the 70 RSI, but nothing there. Lockheed Martin, pull back into value. That's good. So if it can stop going down now, move sideways, look for a V1, V2. MasterCard getting hammered here. We have a lower high. I need to take out this previous low here, move sideways, V1, V2. Mickey D's, pull back into value is where I'd be looking. Merck, gonna have to take a loss on this today because it closed underneath the 100-day moving average. But again, I'm glad I phased out of some of this when it was profitable to help mitigate the loss to the downside. Microsoft, down, closed, gapped up. First day, closed below. Looks like it's going to close below the gap. So pull back into value. Netflix, hanging in there pretty good. We were above the 1 ATR channel coming into the value zone, moving sideways. See how it's holding support? Now I would look for a V1 or a V2. Nike, oh my goodness. I mean, talk about, look at this, third ATR channel to the negative third ATR channel in 4 days. That's a whooping. So we're at 29.24 RSI. You know, if this closed back over 30, it would be a legitimate buy, but that's all you would have is an under 30, over 30. I'd prefer to see if we could get to the 200-day, or I'm sorry, the 100-day moving average. You know, it'll be interesting to see how the market closes today. Of course, with the coronavirus expanding, I'm sure over the weekend there's going to be lots of headline risk and lots of things. I can't imagine like it's just going to get better, right? So it'll be interesting to see how this market closes. So Nike, as with IWM, IBB, I'd like to see it pulled back to the 100-day moving average. Philip Morris, again, same. If I could get a confluence of the 100-day moving average and the 30 RSI right here, and if we have one more down day, a lot of these will have. Nothing on PayPal. Qs, you know, larger than 1 ATR bar into the value zone, which very likely, in my opinion, will test this bottom negative 1 ATR channel. Silver. So silver does look interesting today. We had the 5-day cross under the 20 and now back over. This is a valid signal on SLV. So I will be taking this at the end of the day. We had the exact same signal back here on the 19th of December. We had the 5 EMA cross under the 20. And look at this beautiful trade, four-day beautiful trade. So that is the same setup as this. I would point out, though, I like this setup better because we had these sideways bars. Sideways, you know, small bars lead to big moves. There's a lot more volatility in this, but I definitely will still take this because the 5 looks like it's going to cross over 20. So I'll buy that at the end of the day. S&P, very likely we're going to go down and test that 50-day moving average. I mean, this is just a normal part of trading. You have extensions with pullbacks to the 50 that happen several times a year. So I will be buying the S&P at the close today. Just very grateful I got out with a small loss and didn't have to write all of that. Bonds just cranking on up there. I know Andrea got out of bonds yesterday, up a little bit today, but you know, it's hard to get the top. But you know, this range up here near the 6 ATR channel, you're really up in rarefied air up there. You know, you're really kind of pulling that rubber band really tight when you get up to there. But I mean, the bond market is scared of something. This is what it's showing. Tesla up today, poor shorts. You have a 600 down day and you can't even get Tesla to go down. Twitter, lower high. Nothing on Twitter. UAL down big today under the 30 RSI. United Health Group down big, nothing there. Oil down again, 2.5%. VIX, no surprise there, up 13%, everybody. So I cannot buy it up here. I did have a really good trade back here on the 21st. We had a under the 30, over the 30, under the third ATR channel, over the third ATR channel, and a V one entry, and this was a great trade. I wrote it from here up to here. Higher now, but I got the meat of it, I believe, was near 15%. So this was a great trade. Verizon, nothing going on with Verizon. Walmart, nothing going on with this. I do want to point out this, when we have a large bar larger than 1 ATR to the upside, generally, if you come back down, you will be able to hold around 50%. This is just a good example, just a good teaching moment. Look for large bars that are larger than 1 ATR. And then if it pulls back to there, the halfway mark there may be a decent place to enter, like maybe on a smaller time frame if you have a signal. To give you an example, okay, so here we have a large bar up, nothing here on this time frame, but big picture, it is holding where it should hold. So if I go down to a smaller time frame, look for an entry signal. Well, okay, here's a V1, right? Here's a V1 near the third ATR channel. That would be a decent trade, because on the daily big picture, it's holding where it should. So if I go down to a smaller time frame and find a signal, that is where I would take the signal. So let's, for funsies, just say we bought it right here. Not buying it, but let's just say we bought it here on this intraday chart. This would be a day trade, looking at the daily, looking for some kind of support on the daily, going to a smaller time frame, looking for a signal. So for funsies, we bought it here at 114.38. We'll take a look at that in a bit. Energy Select down 3% today. I cannot get involved there. Financials down. Real estate was waiting for that to pull back into the value zone. Up here, it seems like it's never going to, but now we are back in the value. Okay, now it gets my attention. If we can get some sideways movement, look for a V1, V2, I'd be all in. No, I'm taking that back. That was a bad statement. I would be all in with my 10% position size. Utilities, nothing here. I need to pull back into the value zone at the very least to get interested somewhere here. Really nice trade back here I had where we were above the value zone, came into the value zone, moved sideways, got a trigger, and this was a really nice trade that I have all the way up to here. So, this is another example of buying when the waters are still and buying when there's consolidation and selling into the move. And healthcare, nothing there. So what I really see today is, so IBB, I'm going to wait for the 100-day if we can get there. IWM, I'm going to wait until at least an under 30, over 30, or a confluence with the 100-day moving average. Silver, going to buy with the 520 EMA crossover, and then our little fun trade here is on our simulated trade here is on Walmart. So looks like silver is the only thing. I do have an order in to buy silver at the end of the day, so that's already programmed in. I'm going to buy the S&P 500 at the end of the day. So before I take a look, just want to look at my current position. So Disney's up, looks like it's going to hold, so I will hold that. Merck, unless if it closes above the 100, I'll keep it. Otherwise, I'm going to have to sell it. SPY, my goodness, buying that at the end of the day. And WIN's hanging right on in there, isn't it? Let me take a look here. Okay. Andrea's in cash except for VIX. Very nice, Andrea. Man, Andrea's a good trader. I'm coming to realize this. Very nice, Andrea. Really, really nice. What's VIX up today for you? Oh, mere 12.75%. Excellent. Proud of you, Andrea. Mount Doji, any thoughts on SXC or GWPH? SXC. SunCoke Energy. Well, we had this nice V1 back here. Yesterday went above, closed back below. That's bearish. But today reversed that, went above this first day here, also above a lot of these moving averages. Although I think, Mount Doji, that it did reject the 50 RSI already. See how it's 49.85? And it looks like, let me take a look. How are we doing on time? 10 minutes? Yeah, it looked like it got above the 50. You know, me personally, if I'm looking to enter something and it has already rejected the 50 RSI on the day that I was looking to buy it, I wouldn't buy it. So to me personally, I wouldn't buy this because it already today told you it didn't like the 50 RSI. If it closes above the 50, oh, now it's 49.85. So if it closed above the 50, not too bad. Not too bad. Back in the value zone. GWPH. GWPH. Well, so we made a lower high, Mount Doji, and we did not wash out the previous low. So whenever I have a lower high in front of me, right? So this is lower than this high, then I need to wash out this low before I would get interested. It is a nice V2, but just my rules, my filters, I cannot do it. You are going to find some resistance right on here. Andrea says, Mount Doji, are you in Dollar Tree? No. Oh, I'm not sure. I think Bing He is for sure, but Mount Doji maybe. Oh, no, I mean Bing He. There you go, Andrea. Yes, Bing He. Andrea's in Bing He. Zach6062, please go look on Investopedia. Did I miss a question up there? Okay. What is a call? Oh, yes. Yeah. That's an option, Zach, but I think Andrea's right. Just type in what is an option. I can talk about that in a minute. But time's running down, so we'll get back to that. I just love Greg's elegant way of explaining things to me. Oh, well, thank you, Zach. I appreciate that. We'll circle back to that one. What about selling puts on Apple? Well, I think if you're going to sell puts on anything, it would probably be Apple. I mean, what are we at 53? I mean, honestly, I would probably sell puts down here to the 50-day moving average or the 30. How are we doing on time? Okay. Where's the 30 RSI on Apple? Ooh, that's way down there. Yeah. That's a bit of a reach. I mean, if I were, I do sell puts, so, I would expect, of course, I don't know, but I would really expect Apple to find some support here at the 50-day moving average. So, if I were to sell, let's take a look here and see if this lines up with anything on the weekly. Would have the 10-day above it. Let's look at the monthly. Has the third ATR channel as support underneath it. On the weekly, yes, you have the 10-day above. On the daily, the 50-day. So yeah, I mean, like 290 I think would be pretty good if you were going to sell puts on Apple and sell premium. Marco says Larry Hyde is great, isn't he, Marco? He is really good. And what's the book? He just came out with the book. I just read it. I think Steve did a forward on the book, or gave his take on the book actually in the book. Maybe you guys can remind me what the book is. I've read it. I can't think straight today. I just don't feel well. But he is great. Mount Doji says, I am not in DLTR. I was looking into DG. Bing He says, yes, Andrea, I'm holding. Right. Hemigal, hey, how you doing? Nice to see you. Thank you for coming by. This is the first time I think you've come by, I believe. Let's look at Intel. Yeah, well, Intel, I would expect Intel to find some support right selling premium, selling a put, I would probably sell puts on Intel at 61. You have this previous high, which will now act as support. It dovetails nicely with the 1 ATR channel underneath you. It dovetails nicely with the 10-day, 10-week moving average here as support. On the monthly, not much on the monthly, but I do like that. Most likely you will have support here because it was a previous resistance. You'd be right in the value zone. Yeah, this is definitely, I actually didn't even think about selling puts today, but now that I'm looking at these, now with Andrew bringing him up, I wish I would have spent some time, because we'll see. But if we get one more down day, then definitely, you'll get more premium. But if I were to buy Intel, I would wait for a pullback into this value zone, wait for some kind of support, and then look for a trigger Hemi. Glenn says, tempted to pick up some silver on Monday. If we close above 17, target 1820 with the stop at 1660, risk to reward 3-1. Yeah, sounds good. I am definitely going to buy it today with the crossover, because that's my signal. What is the value area? The value zone, the value area is, you see the 2 green line channel here, Hemi? See the green here? That's the 1 ATR channel. Here is the negative 1 ATR channel. Anywhere in this zone here, on any chart, I consider the value zone. The Rule by Larry Hite. That's right, Steve. Thank you. Yeah, it was a great book, The Rule by Larry Hite. I'm exhausted. Okay, what are we doing? So, let me look at current positions here. Walt Disney is a champion of champions. So it does look good. I like that it tested the 200 today. I like that it has massive relative strength. Merck. Yeah, I'm gonna let this one go today. I don't like having profitable trades that turn into negative trades. I just think it's bad form when you have a nice trade and then you give it back and then you just hold on. So I am definitely going to clear out of Merck today. SPY, going to be buying that at the close. And Win is a champion. Boy, that'd be nice if it could go green on the day, huh? Okay. So, silver is all queued up, ready to go with the 520 crossover. Let's see how things are closing here. My gosh, Apple's down 4%. Amazon, IBB, IWM. Yeah, if we can get some follow-through selling on Monday, there's going to be some nice things to look at, like the IBB. One of the best confluences, everybody, is a confluence of the 100-day moving average and the 30 RSI. We are getting close on IBB. We are getting fairly close on IWM. How did our fun Walmart trade work out? Remember, we had the large up bar. We pulled back to halfway on the daily. We went down to the earlier time frame. That was our entry right there. So far, profitable trade. Not too bad. All right, so let me just make sure my orders are in. Silver is going to buy. SPY is going to buy. Going to have to get rid of Merck. See the washout bar, the halfway of the washout bar? Looks like it's holding. But I am going to get rid of this one. Like I said, I don't like to have profitable trades that turn into negative trades and then hold on. Remember, be very hopeful when you have a gain. Be very fearful when you have a loss. I have a loss. I'm fearful. I'm going to get out. Come on, Win. Come on, baby. Show some green today. Wouldn't that be fantastic on a day like today? All right, so everything's set. Merck's going to sell. Yeah, good idea, Andrea. This is, honestly, in my opinion, the best time to sell premium is when the volatility goes up, because generally the volatility is overestimated in the Black-Scholes model of options. Generally it is. Mount Doji's. Oh. Boom, 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 boom. Evan said it would be nice if wind went green. I know, but pretty happy what it did all in all, Evan, right? Mount Doji, speaking of good books, Ride of a Lifetime by Bob Iger is so good. Ex-CEO of Disney talks about his Pixar, Marvel, and Star Wars takeovers. That does sound interesting, Mount Doji. Thank you for suggesting that. Mount Doji says, I'm just doing the overnight U Pro trade. Okay, that's the 3 times leverage. Marco says, I also read it. Rule by Larry Hite. Yeah, it was a great book. Really great book. But, you know, I mean, he's a market wizard. He manages billions of dollars. When somebody like that tells you that his main focus and risk, maybe you should listen, right? You know, we all think about making money, but let's just look at the opposite. Let's just talk about managing risk. If you manage risk, the rest will take care of itself. That's really all there is to it. And the deeper and deeper you get into a loss on a trade, the harder and harder it is to get rid of it. I'm sure you've all been there. So taking that first loss is always the best way to go. Steve says, hope you feel better, Greg. Have a great weekend. Thank you, sir. Appreciate it. Nice seeing you. Thank you as always for coming, Steve. It's always nice to see you. Say hello to Holly. Say hello to the dogs. And yes, I would be very happy to be on that podcast. That would be fantastic. That would be fantastic. And thank you. And I'll email you about the V1s, V2s. So thanks for coming, bud. Let's see. Evan, still in KDP, relative positive today. Oh, Evan, I'm sorry. I don't know why. Okay, I'm just a hot mess today. KDP. Okay, I had you down here. I just, for some reason, I must have deleted it. So Evan took KDP back here on this V1. KDP is Keurig Dr. Pepper. Oh, okay, good. So he took this V1 back here on the 20th. He's had a nice ride, and it was basically unchanged today. So fantastic, Evan. Sorry, now I remember taking a look at this. So we have you back on the board. Didn't close below the previous day's low. So congratulations, bud. Gamer said, in my chart, SPY rejected the 50 MA. That may be Gamer, because your chart is not adjusting for dividends. Here, let me put mine so it's not adjusting for dividends as well, and see if, yeah, see, this is probably what yours looks like. This chart is not adjusting for dividends, so it moves things around. Doesn't mean that your chart's right, mine's wrong, or vice versa. It just means that's how you have your chart set up. I prefer to have my chart set up to adjust for dividends. But yes, if you don't have it adjusted for dividends, our readings are going to be a little bit off. And this is probably what Evans looks like, right? But mine, adjusting for dividends, looks a little bit different. And now I'll switch it back. All right, let's see. So I'm at a Merc for a loss. Wow. January was quite volatile, wasn't it? All right, let's take a look at SPY. Where did I get filled on SPY? 321.73. Wow. Unbelievable. A 2% move on the S&P is massive. It is massive. Down 603 points. All right. Well, look, we're getting into a bit of a reasonable area down here, right? I mean, sorry to sound like a broken record, but this is the peril of buying up here above the third ATR channel in these high RSI ranges. I mean, we went through this period where it just went up and up and up and up, right? But, you know, It's back down. So anyway, now, the market's fearful. Market's going down. Now we need to start looking, for some entries. Oh, silver, 1682. All right, so I got filled on silver at 1682. That's the new trade. Now on this trade, this is a crossover trade. So this one's pretty much on autopilot unless we reject the 70 RSI or the price closes back below both the 5 and the 20. These are the two moving averages that I used as my crossover. So if the price immediately reverses and closes back under, it's a bad sign. If you trade mechanically, you just want to stay in this trade until for the 5 to cross back under the 20, but I traded a little bit differently because, as you know, I'm always focusing on risk first. And, if it closes back below both, I consider it a bad omen and I would get out. So anyway, new position here on silver, 1682. Disney did hold above the 200, so I'm keeping SPY, overnight SPY here trade at 321.73. Silver, the 520 EMA crossover at 1682, and win definitely held above the 200-day moving average and the halfway of this washout hour in the 100. So I do have earnings back here on the 6th, so I do have to get out. That's why I put this red line here, so to remind me. So all right, well, that's that. Okay. Okay. So, Evan was asking about calls. A call gives you the right, but not the obligation, Evan, to buy a contract of a stock. And when you buy one contract, you're buying 100 shares, controlling 100 shares. So the nice thing about options, at least the positive part of options, is that, it's a limited risk. So, if you buy one contract and then now you're controlling 100 shares of stock, all you can lose is what you bought the contract for. That's all you can lose. And if it goes up, you can make many multiple times of what your initial investment was. So the positives are you have a limited risk. You know exactly what your maximum risk is. You have unlimited upside. But on the downside, you're losing time decay every day. So even if the stock doesn't move anywhere, you're starting to lose a little bit of money. So, I think, in my opinion, the majority of professional options traders sell premium. They sell calls, they sell puts, they don't buy puts, they don't buy calls. But I think Andrea is right. Go to Investopedia and read about calls, read about buying calls. You can either buy a call, you can sell a call, you can buy a put, you can sell a put. It just depends whether or not you're on the buying side or the selling side. If you're on the buying side, like I said, you have limited risk, you have unlimited upside potential, but you're dealing with time decay. The percentage of your wins is probably not going to be very high. If you're selling puts or selling calls, your winning percentage is higher, but yet you only have a defined gain and you have unlimited risk. So there's pluses and minuses to all of them. I like to sell puts. I like to sell premium. I like to identify a location where I would be happy to buy a stock if it gets there. And if it never gets there, then I get to keep the premium. If it gets there and I decide I like where it's at, then I still get to keep the premium and then I go long the stock. Thanks, Jesse. I appreciate it, my friend. Hope you have a good weekend as well. No need to apologize. Evan says no need to apologize. Well, I feel bad because I deleted it for some reason. Bing He said, okay, cut loss on F wonk and keeping LVN. Okay, so you're out of that. Let's put you down for LIVN. Bing He, I don't know if you can remind me where you bought that, and then I'll put you up on the board here so we can watch. All right. Well, it'll be interesting to see what February brings for us. So we're down now, definitely on the SPY. I mean, if we look, let's take a look. So, so if we go back here to, that was the last trading day of the year. Yeah. Oh, it looks like on SPY we're exactly even on the year now. So all of this huge gain in the SPY has been given back. I mean, that's quite a big pullback from the high up here to where we are here. It's a 3.63% pullback in 1, 2, 3, 4, 5, 6, 7, 8 days. That's pretty significant. Evan says, I decided to come on the SLV. All right. Well, we are on the same trade now. So let's put Evan up here as well. You know, do we know it's going to be a big winner? Of course we don't. Could it go crashing back down? Yes, it could. It's happened many times on silver. But, you know, the nice thing about these crossover trades, if you get a good one, you know, you can make multiple times to the upside what you would be losing to the downside. You too, David. Thanks, gamer. I appreciate it. Andrea says, sorry to hear you're ill. Not corona, I presume. I certainly hope not, Andrea. Hopefully you're not going to see me on the news about a stock trader getting the coronavirus in Utah. I hope not. I hope not. But thank you, Andrea. Appreciate the kind words. Glenn says, sell signal triggered on my Canadian dividend shares yesterday. Screwed up sell order and ended up taking a bigger loss today. Lesson learned. Thankfully, loss only equals to a cost of a dinner. Okay, well, that's a good way to look at it. You know, yesterday I talked about mistakes. We don't talk about mistakes as much. We talk about losses. We talk about a lot of things. But in trading, something that everyone goes through is mistakes. So my advice, before you put a trade in, take an extra 5 seconds, take an extra 10 seconds, and make sure you're hitting the buy button when you want to hit buy instead of sell. Make sure you're putting in the right amount of shares and you're buying 1,000, not 10,000. This happens all the time, everyone. And I'm going to tell you a story one time when I feel better about the worst mistake I ever made. You know, a huge mistake is when people short. They short, it goes against them, they want to get out, and they're so used to hitting sell to get out of positions when they're long that they hit sell. So instead of getting out, now they double up. That's one that happens a lot. So if you're short something, make sure when you get out, you're hitting buy, not sell, and doubling up your positions. And just, you know, take the extra 5 seconds, 10 seconds, just verify that you are doing the right thing. You know, on submarine where a captain says, hey, dive to 250, and then the helmsman says, aye, aye, captain, diving to 250. It's so there's no confusion and he didn't hear it wrong. And he's taking that extra few seconds to repeat. And that's what we need to do. Make sure you're hitting the sell button or the buy button, whatever one you want, and you're not doing the opposite. Make sure you're hitting the right amount of shares. 68.10. Okay. It held up rather well today, Bing He. It held up rather well. Evan says, I have never seen my watch list so red. Oh yeah, I mean, this is insane. This is insane. Apple down 14 points, 14.48 points. I mean, it's unbelievable. Let's look at the last minute here on Apple and see what happened. Again, everybody, look at the volume in the last minute. It's huge. If you go back through the day, very small, towards the end of the day, that's where all the trades are made. That's where the big financial institutions are coming in. And look at the SPY here, relatively tame. Look at this big move up here though, like 30 minutes ago on SPY. Big move up, right? But in the last minute, down with the big volume. And those are the large financial institutions coming in with size. Again, if you go in the middle of the day, right? Just the middle of the day, you don't have much because it's day traders and algorithms. But at the end of the day, boom. And that's why I like to make my decisions at the end of the day. Bing He, Greg, for your profit target using 50 or 70 RSI, do you keep moving this target every day so the initial risk to reward plan during entry may end up worse since the profit target may keep moving down? No, that is true. That is true. Let's see, for your profit target using 50 or 70 RSI, do you keep moving this target every day? So the initial risk to reward plan during entry may end up being worse. Yeah, it is true, but my profit targets, I never really look at getting to the 70 RSI when I'm formulating my risk to reward. I mean, if it gets there, it's nice. Let me see if I can find an example. So on Walt Disney, yes. See, the 50 RSI is up here. So from here to here is my risk. From here to here is my reward. Now, can the 50 RSI come down? Yes, it changes every day. This is not a static. This was the 50 RSI for today. So in coming days, yes, it could come down, right? But if it comes down too much, I will already be out of the position. Do you see what I'm saying? If it moves up, then it will move up. So I don't think you have to worry too much about that happening, because if your 70 RSI is moving down so much to change your risk to reward, you will most likely already be out of your trade if you had a small risk to the downside to begin with. Does that make sense, Bing He? Evan, Greg, I remember the day you mentioned you almost bought Amazon shares thinking you were buying Beyond Meat. Bit of a difference in price. Yeah. I've had some spectacular mistakes in my trading career. I mean, spectacular. So, oh, Katie. Okay, give me one sec, everybody. Sorry. Here you go, girl. Yeah. Here you go, sweets. Out you go. Katie just had enough of stock talk. I just laugh when I think about some of the mistakes I've made. And you know why you make them? Because you get used to trading. Boom, boom, boom. You don't have very many mistakes. You just kind of get in the rhythm of it. But always slow down. Make sure you're buying the right symbol. You're buying the right amount. You're hitting the right buy button, sell button. I'll go further into this story, but in case any of you trade futures, I think you'll appreciate this. One day, instead of selling one contract of a full Japanese yen futures contract, instead of selling one, I actually accidentally sold 100. Can you imagine selling 100 contracts, full futures contracts, when you meant to sell one, but you actually sold 100? Because it was the Q, or it was, what do you call it? When you're in your browser, and earlier in the day, I had bought 100 contracts of something, and so it got into my cash. That's right. It stayed in my cash. So when I hit the one, it autofilled. You know how it autofills? Don't have autofill on your browser if you're using a web browser to trade because of that very reason. But yeah, I went to sell one contract of the Japanese yen, and I actually ended up selling 100 because it autofilled with 100. And if you don't trade futures, you may not appreciate how big that is, but that is freaking huge. I'll tell you about the profit and the loss on that another day. So, oh, hey, I forgot. Listen, if you have any more questions, any comments, happy to go over them, but I just need to put in my quick little plug, let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I do teach a course, 5 sessions, each session's between 2 and 3 hours. I love to teach. I've had really good success with my clients. The course I teach is very, intensive and covers everything that I've learned in trading, being a full-time trader for the last 24 years. I teach you everything I've learned from all my mentors like Stephen Burns and Dr. Alexander Elder and Carrie Lavorne and Larry Williams, and all the things I've developed myself over the years. So it is $1,000. I know it sounds like a lot of money, but I promise you, I think it really is worth every penny. Just from the experience and, the mentors that I've had to kind of put it all into just one course. So, if you're interested in taking it, reach out to me. My email is in the description of this video. You can contact me on Twitter. I do it in the nighttime, when things are quiet, and it's very interactive. I spent about the first half of each lesson teaching. Second half, I ask you questions. I try to mess you up. I throw curveball questions at you. I want to make sure you really understand it before we're done with that particular lesson. And we do a lot of chart study. We go through, chart after chart after chart. What's good here, what's bad, what's the risk to reward, what does it look like on the larger time frame. So it's a great course. I sincerely believe that you're going to be happy that you took it. I really do. So if you're interested, what I like to do is I like to have a free Skype call with a potential student beforehand just to see if we're a good fit for each other. I like to know more about you and your trading and your challenges and your goals. And of course, then you can ask me any question. And then, if we decide we're the right fit for each other, then we can move ahead. But the Skype call is totally free. There's no pressure, I promise you. So if you're interested, please reach out. And then if you did like today's podcast, if you're learning something from this channel, I really would appreciate if you could hit the thumbs up button on the way out. It does help promote the channel. A lot of people out there, I think, would benefit from this channel if we could get them here. And hitting the thumbs up button is one way to do that. So anyway, there's my daily plug. Let's see. Evan says autofill off. Gotcha. Yeah, if you trade with the web browser, because the last number that you put in is going to pop up. I mean, unbelievable. That was like the worst thing ever. Like, it turned out okay. Oh man, especially when you're dealing with futures. So, wow. So the Dow was down 603 points. Unbelievable. Where did Boeing end up? And down. IBB down, but off of its lows. Wow. All right. Well, if anybody has any other questions, please let me know. Before I sign off, I like I say every day, please go out and do something nice for somebody today. Try to make it a habit. A lot of people out there maybe going through a lot of bad things, may have lost their faith in humanity, and then you come along and do one nice little, just small gesture. It really might turn their whole world around to the upside. So, try to get in the habit of that, of giving back a little bit and just trying to be a nice, pleasant person, and improving our world a little bit just by a small gesture every day. Okay. All right. Well, thanks again for coming, everyone. Always nice to have you here. I always look forward to it. I think we have such a great group, and it's nice to know everyone. So go out, have a nice weekend, do something nice for somebody, and I will see you most likely, God willing, on Monday at the end of the day. And Jazzy K, what average profit in a month roughly? Well, of course, that depends how much money you're trading. But, my goal every year is a return of somewhere between 12 and 18%. So 1% to 1.5% a month is my goal for a profit. And I do achieve it, definitely more than 50% of the time. Miko 25, thanks Greg, have a great weekend. Thank you for coming by. I think that's the first time I've seen you, if I remember correctly. But thank you for coming by. It's nice to see you. I hope you come back. So I hope that helped, Jazzy K. So yeah, that's my goal, right? It's not 30-40% a year, and I don't always hit the 12 to 18, but over the years that's been my goal, and I've hit it more times than not. But I trade pretty conservatively as well. Of course you can get higher returns, using options, different things like that. But of course, you always are, with higher returns, you're having to risk more as well, right? So, there's no free lunch in trading. Okay, well that's it. So thanks everybody. Be safe. Have a nice weekend. Hope to see you Monday, and go out and do something nice for somebody today. Okay. Okay, take care now. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.